The Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. Welcome. I'm Steve Rhodes, host of The Trader's Edge, and thanks so much for joining us. It is a fabulous Friday. Hope you're off to a good start for your Friday into your weekend. Hope you're going to have a great weekend. I know I absolutely am, and absolutely you should be as well. Now, you can follow us on TigerTV. If you go to the homepage at tfnn.com, you can click on TigerTV. You'll be able to watch us live on your not only your computer, folks. Actually, if you go to the homepage at tfnn.com, over on the right-hand side, there is a new button over there that you'll see that will go ahead and allow you to take advantage of our new technology so that you'll be able to see a real clear picture or a clearer picture on your iPhone, your Android phone, most of the devices that are out there. And if you're listening to us on the radio, we really do appreciate that. Good morning to everybody out in Washington, out in the Spokane area. And if you're catching this on the archive show up in New Hampshire, thanks so much for listening in. You know, right now, if you take a quick look at the markets, you've got the Dow down, not down, it's up about 26 points. The ES Mini up about 4 points. NASDAQ up 4 points as well. And, I've got the chart of the euro up on the screen here. This is the 120-minute chart. We'll start off the day when we come back to these charts, if you will, focusing in on this, because what we know, it's real easy to understand what's going on inside these markets. And I absolutely want you to understand what's going on in these markets and how you can take advantage of just the simple different patterns that are non-random patterns that set up in this marketplace. I absolutely want to be able to teach this to you, because then what you'll be able to do is you'll actually be able to report on the news. You'll be able to give the news stories by looking at the charts versus having to worry about what story they might have just published there, because it's really the markets that are always giving you the real story, the real information with regard to what's going on out there. And for the next hour, folks, you're underneath my care, my guidance, my protection. Why? Because I want to help you make money. I want to help you save money. I want to protect your assets. I want to do everything I can to help you in this money game. And, folks, yesterday we talked about trust, and there is nothing faster than the speed of trust. All you have to do is just really test it out. And what I want you to do is I want you to have trust in yourself. I want to be able to teach you and provide you with some tools so that you can increase your trust, so that when patterns set up, that you know that they've worked a majority of the time, a significant portion of the time, so that you can go ahead and take trades. And when we come back to that euro trade, Tom trusted me yesterday, and he benefited from it. So if I can teach Tom something, don't you think I can teach you something as well? That's what it's all about, folks. And, a lot of times, and I got some really great emails yesterday from some folks, they've been listening to the show, and one of those emails was really about the mere fact that there was somebody that, has been kind of sitting on the sidelines, in the game of life, if you will, and just needed something to push them over the edge. And they went over the edge. They took massive action yesterday, and it's so great, to see that type of response, to see that type of email. I hope I am either having that type of response or having that type of impact on you. If I'm not yet, I promise that I will. I'm working hard at it, because I want you to get back into this money game. I want you to not be afraid of these markets. I don't want you to buy in to all the fear, all the BS that you might hear on the network. And BS, folks, that was before Steve. That was everything you could believe before Steve. But now because we take a look at these patterns, we take a look at what these markets are doing, because we understand these non-random patterns, it makes it easier to invest, easier to trade, and that's what it's all about. And it's all about, some of you out there are self-made millionaires. So those folks that are out there that are self-made millionaires, what they know that's most important. See, a lot of times, I think that word self-made millionaire is really the wrong term. We've got to come up with a better term for that, because a lot of times people will think a self-made millionaire means that they did it by themselves. And the reality is, you speak to any self-made millionaire out there, and they'll tell you, sure, they took all the risk. There's no question we take all the risk. There's no question that we make all or most of the decisions, certainly all of the final decisions that are going to have some type of impact. But, the reality is that's all that we do, because the rest requires others. The rest absolutely requires others. In the money game, it requires market participants, it requires systems, It requires mentors and coaches. In the game of business, it requires customers, it requires vendors, it requires landlords many times, it requires so many different people, it requires the employees. You know, a self-made millionaire, and in this game here, in the money game that we're playing, this business that we're playing, it absolutely is going to require others. We can give you the tactics of systems, of trading. We can help you to understand the market participants by just simply understanding sacred geometry. But what you're going to absolutely need, you're going to need that other strategy side of the business, that other 80% side of the business, because that's what it takes. That's that speed of trust. That is when we take a look at this Gartley buy pattern on the euro while the market was crashing down, if you will. When it got to the area that I pointed out to you yesterday, which is right in the 132.871 area, because it had this wonderful sacred geometry. It had this nice 1.618 expansion of a swing point. We're looking at a 120-minute chart, folks, because it had this nice 786 area. That what we said was when the euro got down to there, that was an area where it needed to hold. There was an area where you would very likely stop and you would have a bounce. If you were short, like Tom was short the euro, that was the place where you wanted to make sure that you tightened up your stops, you let the market go ahead and take you out, and then you wait for the next bounce. Or quite frankly there, if you were playing these currencies, you could have bounced and gone the other way, because that was a place, that was a Gartley buy. That was what you're looking to be able to trade the currency, to trade the breathing pattern of the currencies going up and down. That's what these markets are doing all the time. And what we can see here, what we can see with regard to the euro on the 120-minute chart, and I sent out a email alert to all of my clients out there, sent out a Twitter alert, just simply to make them aware of what was going on in the markets, and that this area here had in fact held, that what we could expect with that area holding, that we could expect it first to bounce to the 0.382 area, the 133.7 area on the euro, and sure enough, you know, it did that. It tried doing that, you know, by about the 4 o'clock time frame. And even when I sent out my alert, I said, don't expect this to occur during the trading hours. Expect this to occur in the overnight sessions. Expect this to occur when Europe comes online at 2, 3 a.m. and they start trading. And sure enough, you know, what the euro did do is it came back down and it tested it at 4 a.m., tested that level at 4 a.m. As often it does as it starts to move up, you know, it'll come back. And that's why when you're trading currencies or anything else, you know, what you've got to do is you've got to make sure that you don't get your stops too tight. You know, in this case here, as the Gartley buy pattern was moving up towards the 0.382, that was really no time to move your, to move your stop up, because this pattern was still in place. And what you'll see as it gets up to that area, doesn't have to get right up to that 0.382, doesn't have to be exact. It'll come back down and it'll test out that area. And the way that you want to trade, you know, it's almost counterintuitive, because the idea is when you put all your risk up front, okay, and a lot of times, all of a sudden, people will think, you know, I ought to scale out here, I ought to scale out there. Now, if scaling is your strategy, that's a different mechanism. Then there's a different trading system. But when you're trading Gartley buy and Gartley sell systems, scaling is not a part of the exit strategy. Instead, it's understanding the breathing pattern that goes on inside these Gartley buys, these Gartley sell areas. And so what happens is when you're going to get up to that 0.382, it's going to pull back. Sometimes it might pull back to the 618, the 786. Sometimes it'll even pull back and test out that area again. And what you want to do is, if you had pulled your stop up here, then the way you want to play this, you want to start tightening up your stops when you get towards that 0.618 area. And in this case here, when you take a look at the euro at 8 o'clock this morning, or again, we're in this 120-minute session right now. I can go ahead and go down to the 10-minute bar, and then we'll figure out exactly what time it was. But during this 120-minute session, it got up to a high of 134. 327, 134, 480 was the 0.618. Now, what you could also do here is you simply could take the retracement tool, going from the high bar, the high swing point out there, which was during the 10 o'clock session on the 120-minute chart, come all the way down. In fact, here what you would do is you would come all the way down to the low that it made during the 4 a.m. session. And what you can see is it got up to that 0.786 area just simply of this last move. So it didn't get all the way up there. At that stage, you start going ahead and moving your stops up on a Gartley buy, and you do just the opposite on a Gartley sell pattern. Now, what is this saying? Obviously, what we've seen here is we've seen a big sell-off in the euro, and it's all about currency. All we have to do is just track the currencies to understand where the general market is going. And what you can see is you had a big sell-off here, and then you continued this during the session here for the last 2 hours, if you will. So that would be 8 a.m. to 10 a.m. The session here, won't close for another 40 minutes or so. We'll see how that does. But what we've got setting up here is I believe we still are going to see there's an opportunity here for the euro to get back up to this 134 area, maybe even to that 134.9. What we really have to do is come down and take a look on more of an intraday basis right now and see what's going on inside the 30-minute chart, what's going on inside the 10-minute chart. Here's a thing of beauty, because what you're looking at here is you're looking at really three patterns inside the 30-minute chart. The larger yellow is the Gartley buy pattern that we were just looking at on the 120-minute chart. You've got another Gartley buy pattern that worked. You've got a Gartley sell that worked. And folks, what I want you to understand, and I want to be able to teach you, is that these patterns work on a consistent basis, and it's a way of navigating through what's going on in the marketplace. And when you understand this, folks, you are on your way to financial freedom. We'll be right back.
Yeah, it's always better when we're together.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi folks, Steve Rhodes here. Tom O'Brien and I need your help. Together, let's change the cash for gold industry once and for all. Now is the time to unleash the game changer, and that's you folks. We've all seen the power of viral marketing. It's overthrown dictators, and now it's time to rid the thieves in this cash for gold industry. Together, we can change this industry in a heartbeat. You know about our industry-leading payouts, our free tools, our video valuation, and the education that we provide to help folks value their jewelry. Tom and I are experts and the industry's most trusted team. Please join us now by spreading the word to your entire email list. We'll pay you 5% of the total payout, which on average would be $50 per transaction. 100 transactions is $5,000 in your pocket. We'd rather put our marketing dollars in your pocket and more money in your referrals pocket. Go to TigerMetalExchange.com and click on the Become a Partner button to join our team. Let's start a revolution, folks. We can't do it without you. TigerMetalExchange.com, the only click you need to make.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Give the gift of silver this holiday season. TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks, just a simple drawing allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details. This segment is brought to you by TFNN. Don't forget, you can test drive all the newsletters for free at TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back, 877-927-6648. And thanks again so much for joining me this morning. Now, when we went into the last break, we were talking about the euro. Right now, you've got the Dow futures up about 26, S&P, NASDAQ up about 4 points. So not much going on there. In the Europe, over the DAX is up 45 points. You've got the FTSE. I'm sorry. Yeah, the DAX is up 45 points. FTSE is up 9 points. We're going to go take a look at Hang Seng in Shanghai because that is, you get the Hang Seng down 521 points. That was down 2.7% there. Nikkei down 1.48%. But what I do want to show you, and I don't want you being sucked in to this market today in going long, folks, because that, in my opinion, my humble opinion, that is exactly what would be happening. What is it that I expect here? I expect a normal breathing pattern. Normal breathing pattern. We've got the euro on the 30-day, the 30-minute chart up on the screen. So we saw the pullback. We've been watching the pullbacks, nothing more than breathing patterns. And right now, what you see on the screen here is you see where the euro pulled back to the 0.786 area. Where it got down to this morning during this 30-minute session, where it got down to was in the low there is, what is the low? 133, 166. Now, that sets up an A to B equals C to D that would take you to the 134, 685. If I come back out, just for the heck of it, let's come back out here and come back to the 120-minute chart and see what that would put us at, 134, 685. 134, 685 gets us back up to that point 618. It gets us a little bit over 134, yeah, gets us back up into that area. And that's where I would expect that we're going to see an A to B equals C to D in the euro. And then when it gets there, folks, if you're looking for a short entry, I mean, take a look. You'd want to be taking a look at what the candle formations are looking like as they come in there. If you've got a long-range bar, a wide-range bar, then you'd want to wait for some other type of confirmation on a shorter time frame. But I do expect that we'll see the markets try to push their way up. And don't buy into it as if all the problems are fixed in Europe, because they absolutely are not. And the chart patterns are telling that. They're certainly telling that to me as well. And what I do know is that we're in the worst bear market possible, folks. It's not like anything that we've experienced. We are inside this channel. If you're watching us on Tiger TV, again, I'll just punch that up on the screen because, look, I believe I've got a moral responsibility, not to scare you, a moral responsibility to inform you as to what's going on, because these chart patterns work so well. We are now in this downtrend channel inside the New York Stock Exchange, which is, the better chart to be able to look at because you've got the complete breadth of what's going on inside the marketplace. When we bounce out of this channel, whenever that is, or we start the next bull market, I will absolutely be sounding the horns. But right now, we are in the worst bear market and we just really began it again. We've just got back into it. You really got back into it in the the month of August, if you will. And we're going to be in this thing for a while. And quite frankly, fundamentally, it makes sense as well. So that doesn't mean that you can't play bullish moves in this channel. And it certainly means that you do want to play bearish moves in this longer-term channel that we're in. But I have a moral obligation to do what I can to protect you and your assets and make sure that you're taking some actions. Please don't be in these investments, in these markets, without stops in place. If we go take a look at what's going on inside the futures marketplace here, right now, not really a whole lot. Let's skip the futures for the moment, and let's go over and take a look at around the world. So let's go see what we've got around the world, and around the world what we have here. Let's see what pops up on the screen first. You've got let's go take a look at the Shanghai Weekly. And I was looking at this early this morning, and this is something that I want to point out to you. Because you've been listening in to Tom for hopefully the last 15 years, and you know how important swing points are. And we have callers that talk about the swing points all the time. And right now, what the Shanghai closed out at was 24.2571. Now, the swing point, the last swing point, the most recent one for October, the week of October 28th, the low on that was 24.16 and 60 cents. We're trading right now 24.2571. Hasn't broken through there. Okay, hasn't broken through there. If we come back and we take a look at the swing point that we've got here on the July 2010 area, July 2010, the low there, 24.3161. We are trading below that swing point. And those July swing points, folks, are really important, the July-August area, because of all the planetary configurations that we had. Because these markets, this is a one-world market, we are trading below that right now. That is telling you lower prices to come. When you take a look at the Shanghai, folks, you know where it's trading? The week of February 20th, 2009. Be careful, folks. 877-927-6648. We'll be right back.
Yeah, it's always better when we're together.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2 week free test drive right here, right now.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
Did you know that the price of gold is up over 24% this year, while the GDX, the Market Vectors Gold Miners ETF, is actually down 1.4% this year? Not all gold stocks are created equal, and not all gold stocks move with the price of gold. In October, Tom O'Brien recommended a buy of FCX in his gold report, and only 6 trading days later advised his clients to close the position, profiting almost 22% in this one trade. During the same 6 trading days, the price of gold was barely up 5%. Tom O'Brien's weekly newsletter, The Gold Report, gives investors the inside edge they need to profit in this gold market. Each Monday morning, Tom issues a gold market update at around 9:30 a.m., then issues a full report each Tuesday afternoon. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report. To order your gold report with a free 30-day trial subscription, log on to TFNN.com today or call 877-518-9190.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
To the races. You've got the Dow out of the gate up 77 points. S&P up 8. The composite up 13. Small caps up 3. NDX up 11. And sorry about that, folks. I was having some technical difficulties with my system. One of our systems in here crashed just before it was coming on the air, so some of that futures information I don't think was accurate, but still no problem. Now, had a request from one of our clients that are inside the den, and folks, you want to check out the Tiger's Den. There's no question that in life, if you're trying to find a way to be able to take yourself to the next level, it's really all about peer groups. If you're looking for, another gear, and peer groups and changing your peer groups when it comes to trading is so important, and there is no better peer group than what we have here at TFNN. It's called our Tiger's Den. You can try it out for free for 30 days, and you want to do that because you've got a group of folks in there that also want to put you under their care, guidance, and protection. It's all one nice, happy family. We're all looking out for each other. We're all trying to help each other make money, understand what patterns are going on inside the money game. And one of the requests out there was to take a look at NetEase, N-T-E-S. That's what's up on my screen right now. That's the symbol. And if we take a look at NetEase, let's see here. Let's see what their let's see what the profile is on NetEase here. The 52-week high on NetEase is $55. 52-week low, $35.20. Short interest on that is 1.58. Number of employees, 3,100 employees. So if we're taking a look at this, one of the things that you want to do, now I've got it on a weekly chart here right now, and it's always important to be able to take a look at, different high volume bars that you've got out there. And the one high volume bar from the recent area that we're taking a look at, this little consolidation pattern that it seems to be in, you can come all the way back to the week of October 16, 2009. The high on that was 41.48, low of 36.15, 22 million shares. And what you can see is that has acted as support most recently when you came back into that October 7th week, so that October 4th day specifically. And then what you've done is you've had NetEase, bounce back up. It made a move coming into the swing point here on July 29th, which had 4.9 million shares, came up there and it tested that with 4.9 million shares. Came up there and tested it with 6.4 million shares and was not able to bust it up. When you can't bust something up, what does it do? Tries to bust it down. Well, on the weekly, if you go back to that October 7th time frame, the high was, again, 42.36, 6.3 million shares. When it came down and tested that area, tested with 2.5 million shares on the weekly. That was the week of November 25th. So remember, you got a 4-day, really a 3.5-day week there. So you'd have to do a little bit of the math. Maybe take 2.5 million shares, divide it by 3.5, multiply that times 5 to give you a better feel from a volume standpoint. But if we just simply forget about that, we just simply say, hey, look, it bounced out of there, which it did. Right now, it's going into this weekly swing point here of October 28th, which had, again, 6.4 million shares. This week right now, you're only at 1.8 million shares, so it doesn't have enough. You can see we've got declining highs in here, and this thing is just simply in a consolidation. So I don't know if someone was looking for an entry price. If you're looking for an entry price on this, let this get back into that October 7th week. If we take a look at this on a daily basis, let's see what you've got out there. And the October 7th week is going to come down and test, let's see here if we've got... Now, one thing this does have, which is interesting, you do have some volume at the high at its most recent swing point for October 27th. But a lot of things have got volume up there at that October 27th area. And, time just flies around here, folks. 877-927-6648 to get the Dow up 90, S&P up 10, Composite up 16. We are having a fabulous Friday. Stay tuned because Tom and I will be up for the Money Masters. Then Basil Chapman, Nico DeHaan. I'm going to go ahead and fill in for David White today from 3 to 4. I'm the warm-up band for Tom O'Brien from 4 to 6, who will take us home. We'll be right back, folks.
Give the gift of silver this holiday season. TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks, just a simple drawing allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how. At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by South American Silver Corporation. For more information, just click the South American Silver Corporation banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. 877-927-6648. And got the euro back up on my screen on that 30-minute chart, and you can see it's chugging along. It's trying to make its A to B equals CD pattern. As it does that, that'll put some pressure on King Dollar. That'll make our markets start trading higher. And, its first test is going to be when it gets back up to the top here, this 134. 227 area. If it gets over that, it's on its way to the 134, 685. That's what I think it's going to be setting up, and it's going to look like Santa Claus is back and everything is okay, folks. Don't buy into it. I think this is setting up nothing more than a bull trap out there. Now, what you'll want to do, and we'll certainly be able to have a better feel for that at the 3 o'clock hour. We'll understand what the volume is looking like on the ETF indexes that are out there. But if we just simply go ahead, we pull those up here on the screen. And I do want to thank somebody in the den let me know yesterday that on the small caps that I had a bad tick in there. And so that was great. Was able to check that out. And so now I feel good because now everything was coming together. Once I understood, where we were at with the small caps, because it looked like that was going to be what was going to give us the last clear clue here. Really it's going to be the diamonds, and the diamonds gave us a fairly nice clue yesterday. The diamonds were able to get underneath the swing point from October 27th, although there was 130.45, 120.45. Right now you're trading out at 120.80, and yesterday we got down to the 119.64. You did that on 9.5 million shares. That was coming off of the 9 million shares the day before. You're trading up, back inside that October 27th swing point. But if you take a look at all of the other ETFs out there, none of them are are trading anywhere near the swing point of October 27th. If you're looking for a place to go short, take a look at maybe the small caps, maybe look at the SPYs as they come into the low of the swing point from October 27th. If it can get enough juice to get up there today. On the IWM, you're looking at about the 74.49 on the SPYs. What you're looking at is a low of 125.96. You're at 124.85 right now. And if you're looking at the Qs here, the Qs are the weakest link out there. The Qs seem to be setting up an A to B equals CD down. That would take it into the 51.30. In any of these ETFs, folks, that do try to make it to the downside, again, the swing point that's down there is going to be that Thanksgiving Day week. On the Qs here, you're looking at 25 million shares. Again, that was 3.5 days. I don't have a spreadsheet up on my screen to do what the actual calculation would be. But as we get down there, you want to, take a look at that. But even if we do the gross up, if you will, it still is light volume down there. So breaking a B point, if the market does continue to move down, breaking the B points out on any of these ABC downs, whether it's on the Qs, on the SPYs, on the small caps, is not going to be very difficult to do at all. And so you should get a full A to B equals CD down extension. If we go take a look at King Dollar, let's go see what King Dollar is doing here right now. And King Dollar, as you can see, yesterday came back into that support line that I've got drawn on my screen. I even tried this morning to get down there, and it just doesn't want to back away. You got the dollar index down 11 ticks right now, and this support area here is just simply strong. Last Friday, you had a nice bullish engulfing candle, and, you can go back. We had another one on the 23rd of November, and this has just more bullish signs than anything else. And there is right now, because of the correlations that are existing in the marketplace, and if we take a look at those correlations, let's go ahead and pull up the SPX, the 5-minute, the cash S&P. If we take a look at that, you can see it is a thing of beauty that the dollar index and the markets are tracking. And so you can't be long the markets if you are long King Dollar. It just doesn't work. It doesn't make sense. When what's interesting is every now and then I'm listening to some of these other shows, and the background is noise, and they've got people saying they don't know, where the market is going or why. And, what I do see is folks that are coming in and saying, yeah, it's all about the euro dollar currency pair. Well, it absolutely is. So let's go over to Nick in Titusville, who's been kind enough to hold. Nick, thanks for holding. Thanks for calling.
Fine. How are you today?
I'm doing great. Yourself?
Fine, thank you.
That's good. What's your weekend look like?
Not much.
Not much?
Just keep it warm.
Okay. Oh, I hope it's going to warm up. It was about 10 degrees warmer here, folks, in Florida this morning than it was yesterday. So I'm hoping the cold weather is gone. You wanted to take a look at LYB Lyondell Basel?
Correct.
Yeah, okay. Are you in it, looking to get in it? How can I help you?
I'm in it.
Okay.
They just paid this month $4.50 dividend.
Oh, that's nice.
Plus a 25. That was a special. Plus 25-cent regular dividend.
Oh man.
So naturally, that dropped my stock down.
Yes.
From where I bought it, but then I sold January calls against it to make up the difference.
Oh, good for you.
So now I'm wondering, what does it look like to you?
Well, let's see. Let's take a look at this. Let's see what pops out at us. First, if we take a look at volume out here, you had this thing gap down on the 23rd. It gapped down with 5 million shares. First, it's been in a real sideways trading range. Nothing really new there. So it's acting like the general markets. And the sideways trading range, you're looking, in the range of the $36 area all the way down to that October 4th area down in the $23.75. What is nice is on this stock here, on that October 4th area, it's not like it's a high volume bar that's sticking out at us. It then went ahead, you had a sign of strength, and I'm just, going backwards a little bit. You had a nice sign of strength come in on October 21st. You had 12 million shares. It gapped up. And as oftentimes happens, these stocks come back to that first breakout area. That's what it did when it was coming down on November 23rd. Do me a favor, Nick. Hold on. We'll go ahead and take a look at this through the break.
Okay,
and you bet. 877-927-6648.
Well, it's always better when we're together. Yeah, it's always better when we're together.
As Tom says, go long, America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, before December 31st from your local Barnes & Noble store. And you will be given access to not just one, but two exceptional archived courses. Tiger Scaling, The Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses. Keep money in your community and get a great education. But be sure to act now, because you have until December 31st to take advantage of this opportunity. Go to the front page of TFNN.com for details. Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to your trading and investing. The Money Masters. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. 877-927-6648. You got the Dow up 115. S&P's up 13. You got the composite up 21. Small caps up almost 7 points. It's a beautiful thing out there. I'm sure we are just doing nothing more than just a normal bounce. We'll be paying attention to that euro all day long. We're on the line with Nick in Titusville. He's hoping for things to warm up in Florida as well. We're looking at LYB, which is Lyondell Basel. And so when I take a look at this chart, there's a couple things that I just simply want to point out to you. All right, and that is that first you had this, when it gapped down, the day before it gapped down on November 21st, you had 14 million shares out there, high volume bar that you've got out there. And as this thing came up on December the 5th, you see how it tested it, which is 3.4 million shares?
Right.
Yep. So, it rejected that area, which would be kind of normal. Now it's backing off. Now it's not backing off with a lot. And what you can also see is there's this high volume bar. If you go all the way back to the December 2010 time frame, this was December 14th, 2010. You had 30 million shares, 38 million shares out there. So, you've got some company in. It looks like you still have some company, in on this stock. It looks to me like at a minimum what it wants to do is back off and fill this gap, which will be coming back to the November 29th area, somewhere in that 30.77 area, and it could even get down as low as the November 23rd area in at 29.46. If it got back down there, would that put some heat on you, or you'd still be in pretty good shape?
I'll be in pretty good shape.
Okay, so I would, at this stage here, I'd go ahead and hang in there, and what I do is I would watch those areas, okay?
All right.
All right. Hey, have a really wonderful weekend, and thanks for calling. I appreciate it.
Hey, Steve.
Yes.
One thing.
Yeah.
When you talk to Tom, ask him if he remembers his newsletter he put out way back. Let's eliminate the brain damage.
Okay. All right.
And I have his original book that he put out, Time in the Trade.
Yeah.
And his Time in the Trade calculator disc also, I have that from the original.
Oh, that's great. All right, I'll ask him about the brain damage.
And ask him if he remembers the Italian restaurant in the north end of Boston that he used to go to.
Oh, okay. I'll do that. Did you go there too?
I was born in Boston.
Oh, you were?
The north end.
Okay. What's the name of that restaurant? Let's give him a plug here.
I forget now, but
all right.
I discussed that with Tom. We used to talk about it over the net.
Oh, that's great.
I'll listen at 10 o'clock when he comes on and see if he mentions anything about it.
You got it. You bet. Thanks for calling. I appreciate it, Nick.
Have a good day.
You bet. You too. So, folks, you got the Dow up 109, and actually I'm going to go ahead and punch this chart up here on the screen for you. It's my SPY lunar chart, and I primarily just keep this for my clients so they know exactly where we're at. And what we're doing right now, we're coming into a full moon over the weekend. We're going to howl at the moon tomorrow night, and we've got a lunar eclipse that's happening as well. And so today's action is actually exactly what I would want to see if you were trading the lunar trading strategy, because it was going to be a little bit of a conflict. If the market was going to move down today, then that was suggesting that we would want to potentially go long and not short this market. So with it moving up, you want to, on these full moons, on these new moons, you want to see it either moving up or down into a swing point, in this case here, if we take a look at the SPYs, if it got up to that low of October 27th, which I was talking about, the 125.96, that would be a beautiful thing here. So you want to see, if you want to go short, you want to see the market moving up today. If you wanted to go long into a full moon, you wanted to see the market pulling back. Anyway, stay tuned, folks. Tom and I will be up in just a few minutes. Thanks for joining me, and I'll see you in about 8-9 minutes, folks.
Yeah, it's always better